there, guys, and welcome to this week's Midweek with Indiacharts. I'm your host, Muskan Kapoor, and I'm joined here with Jay Vora. We're going to discuss how the market was placed and how it's ought to be. So, without any further ado, I'll just get started. We'll start with the CFT data, which is out, and we have had another record high as far as net short positions in the S&P 500 index is concerned. Also, the S&P 500 couldn't break decisively. What's your view on that and on the other US indices?
Sure. So I'll quickly share my screen. When the last time we had discussed, so if you remember, 4180 to 4200 was the area.
Yes.
Okay, that was the point of resistance for S&P 500. And if you look over here, I mean, what had happened is that the S&P index, it went to the high of 4212. Okay, but on a closing basis, there wasn't a decisive break. I mean, it broke for a day, couple of days it sustained, and yesterday it gave up. Okay, now the issue is that we don't have a decisive breakout. So in which case there is a chance that we continue to hover around this range, and S&P actually has to break out above that and sustain above it. So that is where I think that the shorters will then get tired with holding the short position, because you have to understand that people who are holding short, they have been holding short since a very long time, and emotionally it is very draining. I mean, this is the psychological part. So that is why we see that once certain level is taken out on the upside, that is where the panic start creating. Because when we short, for example, if I have shorted over here and the prices have gone down, and I think that it is going to go down, but it doesn't, and it goes up, and then it again sees a pullback, and now this is the reference point for me. Okay, if it breaks above this and it starts sustaining above this, then if I am short, then I'll start panicking. Okay, that is where we end up seeing those short coverings and all. So right now the only thing I can think of is that right now in US, it is almost a consensus that a recession is going to kick in, and to that extent there will possibly be a deep cut for the Dow Jones stocks and S&P stocks, and that can actually drag the index. But now no one knows, okay, in this entire decline how much of that thing is factored in. Because when someone thinks alike, I mean, when there is a consensus thinking, then no one really knows that how much of it is factored in. And that is where the role of price action is very important. Because people say that even on a bad news, when the stock or a index is not going down, that means that probably that thing is factored in. Okay, and market is looking ahead. If you see the Fed rate, the Fed fund rate is around 5.25 or 5.5, then there is all possible worst thing that can happen is happening right now. There is a new issue that has cropped up of debt ceiling. Ultimately, that is going to get resolved. Everyone knows that, but there is some drama that is going on. Okay, so maybe in next 1 or 2 weeks, eventually this thing should be cleaned up. But as of now, that is creating some drama in the market, and there is some fear that US will default, etc. But to be very honest, I don't think that is going to happen. And in which case, until this drama doesn't resolve, there can be some more sideways sort of consolidation that can happen. But when you see the chart, I mean, this was the reading as of last Friday, and it has hit another record low, in terms of shorting. So I think that if the S&P 500 breaks above 4200 and it sustains above it decisively, then that is where I think short sellers will they will have to unwind it, because they cannot be adamant for a long time. Because ultimately you have to understand that every fund manager, they have the pressure of performance. When things are not going in their favor, their returns will take a knock. And if their returns will take a knock, eventually they'll be forced to unwind their position. Okay, so that is how it works, especially in portfolio management and in fund sort of environment. So that is on the S&P index. So broadly, I think that we should be headed higher looking at the positioning. Okay, and I think that right now it is almost a consensus trade that everything is going to go down. So probably at any high, what they are seeing, the people who don't follow, whatever high they are seeing, they are probably shorting in the expectation that when the earnings turn down, there will be a big sharp correction and all. But I would again say that price action is very important, and if price action is not breaking down, then market is trying to tell you something.
Yeah.
Okay, which you should open with, you have to have that view, and you have to think with an open mind. What am I missing or something like that? So there might be times that the news flows are very bad, and market does a different thing. I have many such instances that are ingrained in my mind, because I remember when I was actually doing my first job, and at that point of time, I think around 5,100 it was, yes, this low. So at this point of time, the war was breaking out, crude oil was on a tear, I think USD INR was on a tear, and that is why uh, India was in a very bad situation. That's when Chidambaram came in, and he stepped in, and that's where the up move eventually started. Because see, over here also what happened was that the news flow at this low was lot more pathetic than what was there at this low. Okay, so what I'm trying to say is that markets are forward looking, so those sort of news flow may temporarily create some sort of correction, but it won't last long. Okay, ultimately the market will move on. The same was true somewhere over here as well. Okay, over here, the markets corrected because China market used to fall every day like anything, and that used to be considered as a dragon market. Okay, people used to say कि dragon market गिर गया, we are going to get screwed. That was the kind of fear which everyone had. Log people never used to see Indian markets at that point of time. They were just focused ke Chinese market to niche nahi gir raha hai. That is all that they used to pray. Then once that issue was over, and markets move ahead, so that's when Brexit came in. Brexit came in, and people said the world will collapse, Europe will collapse, that will have a negative impact. We saw just a pullback. Once again, the uptrend started. So this isn't new. So my guess is that if I look at the S&P 500 chart, maybe this is my best guess, that the fall might have happened. Okay. On the bad news, what might happen is that we might just consolidate, and we might not even break some key levels. Okay, and eventually it will turn up. So that is possibly the worst case scenario I can think of right now. Or it will be more like that, S&P 500 spends a lot of time, and only then it starts picking up, because 30% correction is meaningful. If you see Nasdaq 100, okay, it is forming higher highs almost every day. It was only yesterday wherein it fell, but until then it was making an higher high, and it has also broken past the August high. It had broken for a brief while. So over here, if you see, you may not see such a problem. Like even if you see Apple, it has broken out from this trend line, okay, after the consolidation. So even then over here, it indicates an uptrend. Then if you see Microsoft, which is a heavyweight of Nasdaq, even there the uptrend is very much intact. So we might get some sort of minor correction here and there, but broadly, if you see the trend, I don't think it is that bearish. It is just the news flow that is very bearish. But when you see the price action, it doesn't tell you so. In fact, it is very resilient. And when the prices don't fall on very bad news, that is when, if you're a bear, you need to be careful, because there can be other side to it.
Makes sense. Talking about how the US markets are placed, let's talk about very important, one of the currencies we always follow, the dollar index. So the dollar index has been on the headlines lately. The headline has been basically causing a lot of trouble for our precious metals as well. So to what extent is this going to impact us, and what is the setup looking like?
So yes, see, one important development that has happened is that I was expecting that this is a five-wave rise. So probably this becomes A, B, C, and the dollar index tops out and we see a decline. But since that is not happening, I think this is getting into a complex correction wherein this becomes W in a pullback. This becomes wave X. Then this is 7 waves. So this is A, B, 1, 2, 3, 4, 5. And basically, in terms of retracement, what I would look out for very closely is 61.8% retracement, which is now at 103.54. If that is, if the dollar index does not close above the 61.8% retracement, at some point of time, I would expect that the pullback rally would be complete. And what would be the confirmation point? I mean, the first confirmation that we would at least watch out for is that dollar index should at least start making lower high, lower lows. Okay, so in case of the dollar index, the low is somewhere at I think the level is 102.55. So it should at least break that. So that is where the higher top, higher bottom sequence, which it is following right now, that will get complete. Once that is complete, then it needs to break the averages. Once the averages break, most likely the RMI indicator, which we follow at Indiacharts, which is a proprietary indicator. So that will turn around, and if that turns around, that will be a warning sign. The pullback is complete, and that's when you can start expecting a major sort of correction to kick in dollar index, and that in turn should lead to a positive impact on the equities and even on the precious metals. Now, I think there was one little surprise to me that to the extent to which silver corrected. Okay, because I would have normally thought that a pullback would have been till the 40-day average, and after that I was expecting it to pick up. But over here, the pullback has gone a bit too much. But when you see the broader setup, okay, it is, I think, very evident that once this correction is complete, it should eventually head higher. Okay, I think on the larger wave count, I have no doubt about it. But on a smaller time frame, if I see, then probably this was wave A, this was B. Now this is 1, 2, 3, and probably this correction is wave 4. Okay, so 3 is over here. This is wave 4 running correction, and now probably we are going. We have seen a 5-wave decline. So again, how do we determine if we are going to see a reversal or no? So back to the basics. We should first see a close above the previous high. Once that is done, we need to see a bullish crossover in RMI. And once that is done, we need to close above the daily averages. Okay, once that is done, that is when you will say that the intermediate correction in which silver is, that is probably complete and we are headed higher. Now, if you see gold, that is actually a lot more resilient. Okay, because if you see gold, it would just look like that it is trading in a range. And once this consolidation is complete, it should eventually rise higher. That is how you would see looking at the gold. And one more important thing which I forgot to mention was that when we see the weekly chart, silver is actually coming back towards the 20-week average and breakout point, and everything is coinciding at the same point. In fact, even if you do the retracement level, it has almost done 50% retracement of the previous rise. So when so many important support levels converge at one point, typically you would see the that particular index or stock or commodity would respect that, at least in the near term. Okay, so once we get the reversal, then the first thing that we'll start watching out for is that is it forming an impulse or is it a corrective wave? And for an impulse, it has to form a 5-wave rise. So that will be then again the starting point that we'll start looking at. But yes, because we have this broader view that the dollar index is going to go down, which in turn is very bullish for the precious metal. So the wave count that which we would follow is that there is probably 1 2 and now 1 2 that is going on, and ultimately 3 of 3 should unfold, which should be good, and that should be ideally very powerful for the precious metal as well, and in turn that will be good for the equities as well. So that is, I think, my take on gold and silver. In fact, gold if we get a positive weekly close, that would be even more bullish, because then we will at least have a reference point. Okay, this low, whatever recent low we have found, that is of 1951. Okay, that will be a major support level, and in fact, when you see on the daily chart, it might also look like a double bottom. Okay, a smaller double bottom. So the first thing is that we break above the previous high, which I think is 1984. And yes, mind you, these are spot levels, okay, in gold as well. There is spot and future. So what I'm looking at right now is spot levels. So I think 1984, that is the breakout point. If gold closes above 1984, that is the first point where we can say that it has now made a higher high. Okay, at least it has broken the lower top lower bottom sequence, and it is expected to do higher top higher bottom. And in terms of chart patterns, it might be a small degree double bottom breakout, and that would indicate that we might see some sort of reversal. And by the time that happens, I think the RMI will turn into bullish mode. Okay, so that's where a lot of things will start falling in place for gold. And of course, we need a dollar decline as well to confirm that.
True. Makes sense. So it's a waiting game for this to see where it probably goes. Also talking about a lot of things happening in the market, you also mentioned about the debt ceiling. So when I go to the Nifty index, it has turned sideways in 1 week and it's just trading between a range. So what's the outlook for the Nifty index and the news of the debt ceiling that we were talking about? Is it going to impact? And if the US economy is also going to impact the Nifty index, how is that going to be placed?
So see, right now there is a lot of worry amongst people कि US में ये होगा तो India में क्या होगा? Will we correct? Will we fall down to the previous low? A lot of such news or articles or scary articles are there. But in my view, like I mentioned, I mean, I have seen such phases, where there are lot of concerns, but eventually the market moves on. Imagine if someone would have told me 1.5 years back that dollar index would be at 120. S&P index will crash 30%, Nasdaq will crash 40%. I mean, crude will go to 120, $140. The war will break out, and still after that, Nifty will correct only 10, 12, 15%. People would have laughed at you. Correct. And that is how the market surprises us. Okay, so the main point is that focus on the price action. At this point of time, I can tell you that there is a lot of fear. I mean, because somehow people are not accepting that probably things might have bottomed out. Because see, we have seen a big 18 months sort of consolidation over here. Okay, and in the past we know that 12 months, 16 months. Now once we see that sort of consolidation, it is usually a very good and a healthy consolidation, because we have to remember that we rallied all the way from, I mean, for Nifty index from 7,500 to almost 18,800. Okay, so at some point of time some correction was due, that has come by, and now you are seeing fresh bullish cycles among the stocks in the monthly chart, and that is where we had put out a lot of interesting setups to the subscribers as well. That if you see a lot of stocks, they have completed the pullback cycle, they have come back to the zero line, and they are now turning around and they are giving a bullish crossover, and that too on a monthly chart. Okay, so monthly signals don't falter in say 1 week, 2 week or something. It can go on and on for many weeks or months. So those are the kinds of setup we are seeing. Okay, and then again, when I see with the price action, like I said, that there is this debt ceiling, everything. See what has happened to Nifty. It is doing just nothing. In fact, I mean, it is not even correcting, 5% or so. There is just 1-2% correction. It takes support at the 20-day average and it moves on. Okay. So for the short term, like, see, I'm not saying that, you know, correction can't happen at all. There, at some point of time, there will be a correction. So we are considering it right now as 1, 2, 3, 4, 5. So once the 5 wave rise is complete, there is going to be a correction. Okay. There is no there is no other thought on that point. The only thing we have to judge is that how deep the correction will be. If the news flow is very bad, probably we will do 61.8% of the entire rise, whatever we see. But as of now, the way we are thinking is that if the 20-day average holds, okay, then the Nifty index can continue to rise higher, and the wave 5 which we are marking right now, that can probably extend as well.
Correct.
Okay, so that is what our thinking is, and as long as we are not proven wrong, we are happy to stick to our view. And that is where the 20-day average, once again, which is around 18,200, that will probably be the cutoff point in the near term. If that breaks, that is where then the divergence that we are seeing right now on the momentum indicator, that is where things will start getting a lot more highlighted. That is because once the 20-day average is broken, that's where it indicates that this might be a short-term weakness. And then that's where we will start thinking that how deep the correction can be. Can it just go to the 40-day average, or can it do the retracement of the entire move and only then move up? So those all questions will start, kicking in. But let me tell you, if you see BSE Auto Index, I think we had showed this earlier as well. There is a range breakout over here that has happened, and you can see how the Nifty Auto Index has behaved. Now imagine, the only bottom line what I'm trying to say is that don't just be fooled looking at the indices, because lot of stocks are doing a lot of different things. Okay, so be stock specific. There are many sectors that are outperforming, which we even highlighted in our previous videos as well. That auto sector. Then if you see PSU, where we had highlighted that a bigger range it is trying to break out above the bigger range. If you see healthcare index, after a small consolidation or a correction, you can say, it is now again turning up. The RMI is again turning up. So these are all good pockets. So what will happen is that there will be some sectors which will underperform. There will be some sectors which will outperform. Stay with the outperformers. That is the whole thing. Because when you look at the data, there is no sentiment data as of now indicating an extreme.
Correct.
Okay. Which means that we are somewhere in a normal sort of market. In a normal sort of market, what you would ideally like is that once we get a bullish crossover, you would trust that time frame. You will have your trade management and your risk management in place, and you will continue to ride the trend. Okay, so that is what I think is very important, because this thing we had highlighted earlier as well, that if you see the BSE healthcare index, for example, it has been in a correction post, once this COVID benefit that was happening to the healthcare index, once that faded out, it went through a phase of correction. Okay, that correction has come by, it has done, it has tested its previous important moving average, which is the 40-month exponential moving average, and it is now picking up. Once we see a close above the 20-month average, it will again pick up. So what will happen is that, if say the bank Nifty takes a backseat, autos, PSUs, and all this will come back. If they take a backseat, some other stock will make a comeback. ITC was probably one of the most laughed stock at, and every single day we used to get those memes ke Karan Arjun to aa gaye, ITC kab aayega upar, and all of that. Okay, but see what has happened. So this is where the focus ideally should be on the individual stocks. Now again, this is not a recommendation, but this is just for an example. I'm telling you that at this phase, the markets was roaring and it was doing nothing. in this entire phase, the market had corrected, but it had no negative months. That was a bigger joke. That So the point is that trust the patterns which it is forming and stay put unless the price action tells you that the trend is reversing. Until then, trust the trend and be with the trend and follow proper risk management. That is where I think good money can be made, because one has to understand that if some trend is going to play out, I mean, it will not falter in a day or two. It will continue to go on for a very, very long time. In fact, I don't know if many people know this or no, but if you see the Nikkei index, okay, I'll do the monthly chart because you need a broader history for this. Can you see? I mean, in 1980 or something, it had made a high, okay, say of somewhere around 40,000.
Yes.
So this high, which the Nikkei index is now making, it is probably almost 20-30 year kind of high. Okay. So the broader point is that, see, over here also what happened was it saw a big rise post-COVID. It saw a consolidation, and now it is breaking out of that consolidation. Okay. And you can see over here, the 40-month average was respected. Okay. Which is sort of how the BSE healthcare were also poised. So the point I'm trying to make is that once you follow that process, you trust that process, and when the price action gives you that confirmation, you have to bet on that, and you have to trust your process, and you have to keep a proper reversal level, and you have to do a proper risk management. Once that is all in place, all you do is just wait out for the trend to play out and be patient with that.
Makes sense.
So this is what broadly I feel, that the Nifty index is probably in a consolidation phase right now. I mean, there are a lot of news that we are seeing right now. Bad news, or you can say scary news, that US will default. Then what will happen to world? I don't think firstly they'll default. Eventually, the debt ceiling issue will be resolved. Everything will get back to normal. There will be interim corrections in between. I mean, that is where we will follow the risk management, and yes, that's how I think one should approach. And probably I feel that the worst is over. We might get some corrections in between, but broadly those should ideally be bought into. And my guess is that the 18 months of consolidation which we have seen, that is probably over, and eventually once things start falling in place, once all the bad news subside, that's when I think again the bull run should continue.
Correct. Makes sense. So you really need to plan your trades if you're entering the market, enter in a certain way, so you don't just enter blindly. So yeah, thank you so much. Charts make sense, words make sense. So just application is in individuals' hands. So hopefully that's sorted out for them. Thank you so much.
Thank you.